Is Houston's housing market on the precipice of a massive decline in 2024 and beyond? Well, the data I'm going to show you in this video, it's very shocking and very concerning actually for certain parts of Houston's housing market. I think we could see a big decline in 2024. In fact, this decline is already starting to take place. Because if we look at a zip code map of the Houston metro, we can see skyrocketing inventory across many of these zip codes in dark red, where the number of homes for sale, for instance, in Sugarland, has doubled over the last year and is now approaching pre-pandemic levels. And when you see inventory all of a sudden double in your zip code, that's a sign of a huge downward shift in the market. Fewer buyers, more sellers, a situation that could cause prices to drop. Because home values in the Houston metro more broadly are 26% overvalued compared to their long-term norms, with today's typical home price being $308,000, while the fair value based on underlying incomes is $245,000. And you can see that this is the biggest level of home price overvaluation that we have ever seen in the Houston housing market, suggesting that we do have quite a bit of price downside. And Houston, it's kind of a boom town, right? Like lots of people are moving to Houston. There's lots of home building. There's lots of construction, new corporations. Of course, like the oil industry is massive across Houston's economy and housing market. So it is an area with lots of legitimate growth. However, when you have lots of growth, you also tend to have lots of speculation in a local housing market. And I'm getting really concerned that there's certain parts of Houston where, the speculation is turning into a sell-off, where we're seeing, a lot of the builders attempt to liquidate inventory. We're seeing a lot of the investors attempt to liquidate inventory. And when that happens, it could cause huge downward declines because those entities, especially the investors, they were, buying up homes. Now they're starting to sell. Like for instance, on this listing in Spring, Texas, which is north of Houston, it's a 3-bed, 2-bath house on the market for $207,000. And the value of this house, folks, it's plummeting. Take a look at this. Just back in June 2022, Zillow thought this house was worth $246,000. Now it's on the market for $208,000. Look at that massive collapse in value. We're back to what it was in 2021. But you know what's wild about that house I just showed you, everyone? It's who the owner is. The owner, according to data from PropWire, is Sway 20141 Borrower LLC with an address at 1717 Main Street, Suite 2000 in Dallas, Texas. This owner owns 65,000 properties. Wow. Who is this owner? Well, I Googled Sway 2014-1 Borrower LLC. It's Invitation Homes, the largest single-family landlord in America. So we have the largest single-family landlord in America dumping houses north of Houston at values representing as much as a 20% correction from what they were 3 years ago. And so this is the dynamic we are now seeing play out in many parts of Houston's housing market, as well as many other parts of Texas. So if you're a buyer, you need to be very, very careful. Because on one hand, it's like, attractive. When you see something like that, you see a big price cut, a 3-bed house on the market for $207,000. That looks pretty affordable. Haven't seen something like that in years and years and years. However, you also got to be careful buying into a market like that, because you could be buying into a market where you're catching a falling knife. Because according to data available on Reventure app, the zip code that Wall Street investor is selling in Spring, Texas, is 38% overvalued compared to its long-run norms. And so 38% overvaluation rate indicates huge downside potential with a home price forecast score of 35, indicating prices are heading down. Why are prices heading down right now? Well, it's overvalued, but in addition, for sale inventory is skyrocketing. We're up to 240 homes on the market in Spring, Texas, north of Houston. Never before, at least in the last 7 to 8 years, have we seen inventory that high. And so if you're a buyer in Houston or any other part of Texas, you gotta look at the inventory trends, the overvaluation trends, as well as the Reventure app price forecast score. Because those 3 data points are gonna give you a big indication about what's going on in your housing market. And if you see skyrocketing inventory, heavy overvaluation, and a price forecast score below 50, it's saying there's a downturn happening and that, over the next 6 months, like prices could drop pretty significantly. But here's the funny thing, everyone. If we go back to the Houston zip code map and look at the Reventure app home price forecast score, which is a score that attempts to project the future direction of prices based on fundamental data points like appreciation, inventory, and price cuts. We can see a score below 50 indicates that future home values are more likely to decline, while a score above 50 indicates that prices are more likely to increase. And what do we notice in Houston? Well, a lot of Houston is blue, which indicates scores below 50. Like on the east side of Houston, we have really low scores, scores of 30, 31, like indicating big downward price pressure, declining market. But interestingly, on the west side of Houston, we see red. We see scores above 50. Like in Bellaire, we see a 62. This is one of the nicest suburbs in Houston. Lots of wealthy people buying in Bellaire. This is still a seller's market. It never corrected out of a seller's market, actually, after the Fed raised interest rates, because inventory, it's still super low. There's only 48 homes on the market in Bellaire compared to 193 5 years ago. And so when inventory is this low, yeah, prices are still going to go up. The Reventure app price forecast score is a 62. And the one big trend that we could see, if we look at the price forecast score with blue meaning prices are going to head down, red meaning prices are stable are going to go up, we could see the one metric this is really correlated with is income. If we look at the median household income, what do you see? You can see these higher income areas in Houston, they're the ones that have the highest home price forecast score, whereas the lower income areas to the east and to the north, they're the ones where the inventory is spiking and the price cuts are spiking. And there could be a variety of different reasons for that. You know, one of my suspicions is that lower income neighborhoods are ones where the homeowners are feeling the most financial pressure right now in 2024. You know, skyrocketing credit card debt, people not being able to afford to go out to eat. You know, inflation's gone crazy in the last 3 years, so maybe we're seeing more pressure to sell in lower to middle income neighborhoods from existing owners. I also think investors selling is a big reason why lower to middle income neighborhoods in and around Houston are seeing a downturn play out. These investors, they targeted neighborhoods like that because the prices were cheaper. Well, now they're selling out. And in some of these zip codes, folks, the spike in inventory is like insane. Like, folks, in 77026 to the northeast of downtown Houston, I want you folks to look at this. We now have 106 homes for sale after having like 30 homes for sale prior to the pandemic. I mean, this is like insane. And what does this inventory look like, you know, in these type of areas in Houston? Well, you can see we got a 3-bed, 2-bath house, 1,900 square feet on the market for $250,000. Let's like take a look. It looks like this might have been a flip. You could see actually looks pretty nice on the inside. This actually looks really nice on the inside. Looks like it has been updated. If we look at the price history, we can see that it sold, it looks like for $190,000 in 2020. Clearly they did some renovations. They then listed it for $270,000 in November of last year and have since cut it to $250,000. And I suspect they're going to have to cut it by more, by how many other listings are on the market nearby. Now, one area of Houston I know a lot of you are probably looking in is not necessarily near downtown or in Spring, but is out to the west side of Houston near Katy. I talked to a lot of you guys out there. I see in your comment section, you're looking at buying on the west side of Houston because that's an area that has some of the best schools. So, you know, the schools in Texas maybe aren't like great overall. The schools in Houston aren't great overall, but the west side of Houston tends to have pretty good schools. You know, if we head out west to Katy, which is a nicer suburb, you can see a typical listing would look something like this: $380,000 house, 4-bed, 3-bath, 2,700 square feet. Like you can see, like even though prices are overvalued in Houston, like you still get a decent amount of house for your money. And you can see like a typical house would look something like this: a 4-bed, 3-bath on the market for $470,000. You know, is this house overpriced? I guess we'll have to see. It's been on the market for 14 days, but if you take a look, you could see that the schools nearby are very strong. Elementary school 9 out of 10, middle school 8 out of 10, which I think is attracting more and more buyers to this area. It's why the inventory of homes for sale out in Katy is still really, really low. Only 199 homes for sale compared to 700 before the pandemic, which is why prices are actually projected to continue to increase out in this zip code in Katy. The home price forecast score is a 59. And you can see in general, like south of I-10, we have more stable to increasing prices. North of I-10, and certainly to the northeast of I-10, prices are more likely to drop. And what I would encourage you guys to do, if you're a buyer in Houston or any other part of Texas, make sure you understand the local trends in your zip code, because this is a super bifurcated housing market. Real estate is hyper local right now, and you need to understand the trends in your area. So head to www.reventure.app and type in Houston. And I want you guys looking at how overvalued home prices are in your zip code in Houston. I think it's also beneficial to look at what the Reventure app home price forecast score is, so you can get a sense if, you know, we're in a seller's market or a buyer's market, and if prices are likely to go up or go down. Those data points, they're part of a premium package on Reventure app. If you sign up for the premium plan at $39 a month, you get access to all those data points on overvaluation and price forecasts. And additionally, if you're someone who wants to save some money, save 15% on the monthly cost, you can sign up for the annual pass at $399 a year. That's going to save you about 15%. And it's great for someone who knows that, maybe you're going to want to be checking and tracking the market for at least the next 4 to 6 months. You can save some money with that annual pass. So head to www.reventure.app right now to inform yourself on the trends in your city.